Hi guys, how are you? This is Abel Tejeda with American Mortgage Group. If you're like most people, you have a 30-year mortgage on your home. Today we'll be talking about different strategies on how to pay off that mortgage early. What most people don't know is that when you get a 30-year mortgage, most of your interest is charged up front. Remember, banks, they're in the business of making money. So they want to make sure that when they lend you money, they get their money up front. I don't know if you guys knew, but it takes 18.5 years for your payment to actually start affecting more your principal than your interest. The problem is most people either refinance or sell their home on average of 7 years. So most people don't get to the portion where they're actually knocking down that principal. So what are the best ways to actually pay off your home, or at least bring down your balance? Number one, get a 15-year mortgage. This doesn't necessarily mean that your payment will automatically double because you're going from 13 to 15. The thing is, when you get a 15-year loan, you tend to get a lower interest rate. And you're not paying interest for such long periods of time. Therefore, at the end of the day, you end up saving thousands and thousands of dollars. Strategy number two is making biweekly payments on your mortgage. How do you do this? Grab your mortgage statement and find a place where it breaks down your payment. Look at the principal and interest portion. For example, let's say your principal and interest is $1,000. What you're going to do is you're going to make 2 payments for $500 each and mail it to your mortgage company. Now remember, you're still responsible for taxes and insurance, but for those you only have to make 1 payment. So don't break the overall payment into 2, just the principal and interest portion. When you do this, you end up sending or making 26 mortgage payments to your mortgage holder. So at the end of the day, you're making 13, if you average it out, 13 payments. So without you even noticing, you made an extra payment to your mortgage. What does this mean to you? Is you end up saving 8 years on average of mortgage payments. Strategy number 3 is as simple as just making an additional mortgage payment. Just as the biweekly saves you 8 to 7 years, the same thing happens when you send an additional payment. So when you get your tax refund, if you get a bonus at work, instead of spending it, send it to your mortgage payment or to your mortgage company. Now you got to remember though, you need to add, when you send that check under the memo, add to be applied directly towards the principal, because if not, they're just going to take it as another payment. So if you want to knock down that principal, it has to be applied directly to the principal. Another really smart strategy that hardly anybody takes advantage of, because everybody decides to spend that money, is refinancing your mortgage to get a lower rate or to remove the mortgage insurance. But here's the key, making the same amount of payment. Meaning, if your payment is $1,500 a month and you refinance and now your payment goes down to $1,300, you're saving $200 a month. Over 12 months, that's $2,400. If you think about it, if you keep making the same payment, now you send an additional payment and a half over a year. So just by doing this, you'll be saving at least 7 to 8 years. So which strategy is the best one? Well, the answer to that is whichever one fits your budget. Remember, when talking about mortgages, it's never a one-size-fits-all. What's good for you is not necessarily as good to your neighbor. So the best thing to do is to sit down, strategize, and let's see which option or which strategy is the best one for you. Don't forget to follow me on YouTube, and if you have any questions, you can always email me or give me a call. This is Abel Tejeda with American Mortgage Group, and these were the strategies to pay off your loan early.